Hello and welcome to 3.0 TV. This is Shikha Singh. Bitcoin is showing early signs of decoupling from US equities as global markets reel from President Trump's tariff shock. While the S&P 500 and Dow Jones plunged over 5%, wiping $5 trillion of US stocks, Bitcoin was trading at $78,000 even after rebounding to $84,600 during Friday's session. Analysts say this divergence could mark a structural shift in how Bitcoin trades, setting the stage for a potential rally towards $100,000. Blockstream CEO Adam Back and BitMEX founder Arthur Hayes both suggest Bitcoin is beginning to trade on its own fundamentals, and Hayes believes tariffs may push central banks toward more fiat printing, which could enhance Bitcoin's appeal as a hedge. Meanwhile, MicroStrategy's Michael Saylor pointed to Bitcoin's high liquidity as a reason for its short-term volatility but not long-term correlation with equities. This shift in sentiment could trigger a capital rotation from gold to Bitcoin, according to market analysts. DeFi revenues plummeted in March, with protocols across Ethereum, Solana and BNB chain recording month-over-month drops of over more than 50%. The pullback reflects a broader cooldown in on-chain activity and trading volumes. And according to the block, Ethereum-based platforms like Aave, Lido and Curve collectively earned just $24.5 million in March, down 52% from February and 65% from January. And Solana's DeFi leaders, including Pump.Fund and Radium, saw a combined $42 million in revenue, falling 55% month over month, while PancakeSwap on BNB chain dropped 54% to $21 million. The outlier was MakerDAO, now rebranded as Sky, which posted 11% increase to $10 million in revenue, the only major protocol to record gains. Meanwhile, DeFi tokens continue to suffer, with GM DeFi index down 40% year-to-date, signaling sector-wide investor caution. Acting SEC Chair Mark T. Ueda has instructed the agency's staff to re-evaluate multiple internal statements related to cryptocurrency regulations, including guidance on the Howey test and risk warnings tied to the crypto investing. This move follows Executive Order 14192 aimed at regulatory rollback and incorporates recommendations from the Department of Government Efficiency. Ueda's directive targets several key letters, including a 2019 Howey test framework and a 2021 investor advisory on Bitcoin futures risk. Statement post FTX collapse in 2022 urging clearer disclosures on crypto exposure will also be reviewed. The goal is to modify or rescind them consistent with current agency priorities, Ueda said. Defiance ETFs has filed for a novel product, the Defiance MSTR double short hedged ETF, designed to short both 2x long and 2x short leveraged ETFs tracking strategy, formerly known as MicroStrategy. The goal is to capitalize on volatility decay, a phenomenon where both leveraged ETFs can lose value over time due to compounding errors when held beyond a single trading day. And the ETF won't use Defiance's in-house products but will short unaffiliated leveraged funds, according to the filing. The strategy hinges on leveraged ETFs' daily reset mechanics, which can cause value erosion in range-bound or choppy markets even when the underlying asset moves sideways. Bloomberg ETF analyst Eric Balchunas said it a new flavor of hot sauce, echoing a similar trade by Rob Arnott, who has been shorting leveraged ETFs for fun, not necessarily high returns. And Balchunas warned of potential tail risk, especially in the market trends sharply in one direction. Cathie Wood's ARK Invest added 83,157 Coinbase shares across the ETFs Friday, totaling $13.4 million in new exposure following a 5% weekly decline in Coin's price. The largest chunk, which is 54,988 shares worth $8.8 million, went to the ARK Innovation ETF, boosting its Coinbase stake to $342 million, or 7.5% of its portfolio. The ARK Next Generation Internet ETF and ARK Fintech Innovation ETF bought $2.5 million and $2 million worth of coin respectively. Coin now ranks as the second largest holding in ARK ETF and 9.4 behind Shopify. ARK also added Amazon shares with worth $7.8 million across all three funds and trimmed positions in UiPath. Coin's valuation has slipped below $30 billion for the first time since September 2024. Despite a high of $343 in December, it has dropped to 5% over 6 months. ARK made similar coin purchases in March during previous dips. OpenSea has reclaimed over 51% of Ethereum NFT marketplace volume, a major recovery from its low of 13% in mid-2024. However, this gain is attributed more to rival Blur's underperformance than OpenSea's success. Since peaking in December 2024, Blur's monthly volume has dropped at an average rate of 55%. OpenSea also saw a 48% volume dip from December to January, but a bounce back 20% in February following the news of its C token. Still, both platforms suffered in March. OpenSea's volume fell for 67%, while Blur's declined 62%. Overall, the NFT market has struggled sharply across the board in 2025, and OpenSea's relative growth in market share masks broader declines in total NFT activity, suggesting waning interest in Ethereum-based NFT trading rather than other platform-specific strength. Ethereum's transaction fees have plummeted to their lowest level since February 2020, with the 7-day moving average dropping below $500,000 per day, down from a peak of $30 million in March 2024. Despite this, daily transaction volume remains steady at around 1.2 million, signaling a structural shift in Ethereum's fee economics rather than a drop in usage. The dramatic fee reduction is largely credited to upgrades like EIP 4844, which introduced blob transactions optimizing data storage for Layer 2s, and the rise of cheaper Layer 2 networks like Base. As of April 6, total fees stood at just 317.1 Ethereum, according to Glassnode. While this benefits users with lower cost DeFi activity, it also impacts validator incentives and burn rates. Ethereum is also seeing a decline in new address creation and exchange supply, and a potential efficiency boost may come with Ethereum's upcoming Petra upgrade on May 7th. Shiba Inu's long-term holders have pushed their balances to a new all-time high of 787 trillion SHIB, signaling strong conviction despite the token's recent 8.4% monthly decline. According to Into the Block, SHIB long-term holders now control over 80% of total holdings, with holder addresses also hitting a record 1.11 million, up from a total of 1.4 million addresses. This increase suggests that while short-term holders have exited during the downturn, long-term holders are maintaining positions, betting on a price recovery. Supporting this sentiment, SHIB's aggregated funding rate has remained positive, and order flow data shows a recent surge in buying activity, with 1.57 billion tokens acquired in the past day. Although SHIB was trading at 3.67% weekly and 0.85% daily loss, strong demand and positive net flows hint at an upcoming rebound, and a reclaim could trigger a breakout, but failure to hold support may see a reset. XRP is experiencing a significant pullback, with its 24-hour trading volume sinking 56% to $2.25 billion, according to CoinMarketCap data. The sharp decline comes amid a broader crypto market sell-off, as investor sentiment remains cautious. After briefly rebounding to $2.17, XRP is struggling to maintain momentum, facing renewed selling pressure in the market's uncertain environment. The decrease in trading volume suggests traders are adopting to wait and see approach, staying on the sidelines as broader market conditions drive volatility across major cryptocurrencies. The HYPE token has experienced a dramatic crash, falling to $11, marking a 67% decline from its all-time high of $35. This drop has reduced Hyperliquid's market capitalization from nearly $10 billion in December 2024 to $3.8 billion. The token's significant dilution risks are a major contributing factor, with 333 million of its 1 billion tokens currently in circulation. Token unlock set to begin in November 2025 will release 216,000 tokens daily, increasing inflationary pressure. This decline follows Hyperliquid's challenges after the jelly crisis, which led to a reduced network activity. Additionally, Hyperliquid's 7-day volumes dropped by 27%, while daily volumes plummeted by 70%. A bearish technical pattern signals further price declines, with the HYPE token potentially nearing its all-time low of $10 unless it can break resistance at $13. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.TV. Do like, share and subscribe to our channel. To log on to the website www.3verse2.io, scan the QR code to know more.